Yo, what up, guys? This is the voice of Mr. Solution. So, on today's episode, we'll be looking at understanding the Bollinger Bands trading indicator. Actually, there are many indicators. There are many indicators that traders use for trading. So, on today's episode, we'll just be examining the Bollinger Bands. Okay. So, in the course of our studies, these are the things we'll be looking at. We understand what a Bollinger Band is and how it works. Common mistake people make when they are using Bollinger Bands, and how to use Bollinger Band to identify big moves before they occur. And then you also look at how to use Bollinger Bands to get a very good entry. And finally, we look at how to use the Bollinger Band to ride massive trends in the market. Okay, all right, guys. So before we continue, if you're new to my channel, or you've not been here before, or maybe this is your first time of visiting my channel, I kindly encourage you to hit the subscribe button, like the video, share it to your community, share it to anybody who wishes to develop his or her knowledge of cryptocurrency trading. And if you're looking for any community of traders you want to join, I welcome you to our cryptocurrency Telegram group. The link will be at the lower section of this video. And also, any question you want to ask concerning cryptocurrency trading, I'm open 24/7. You can reach me through any of my social media channels. The link will equally be at the lower section of the video. All right, let's proceed. So, please, I want you to understand that I am not a financial advisor. So please, whatever it is you'll be learning here, take it with a pinch of salt. Nothing is cast in stone. That's why I said carry out your own independent verification of facts and data. I'm not a financial advisor. I've said that before. If you seek financial advice, please speak to a professional. And I am not one. I'm not a professional advisor. What I do here is just for edutainment. I educate you and as well as entertain you. It's not any professional service. Okay. So finally, you need to understand that trading is an extremely risky activity. Your trades are your responsibility. So please trade at your own risk. All right. So this is the Bollinger Bands. We need to understand that it has three components. And before we go into that, a little history of Bollinger Bands. Bollinger Bands was developed by a man named John Bollinger, who plotted 3 standard deviations away from the mean or the middle band. What do I mean by that? Okay, this is the Bollinger Band itself. Okay, so we'll just get this. We'll go to the live class so that you get to understand how we get it from we can get it from any given chart. Okay, so this is just the Bollinger Bands. We have the middle band, we have the lower band, okay, and then we have the upper band. We have the upper band, there's a lower band, and then there is the middle band. So let's go to the live section for us to understand more about this. Okay, let's go to the live section. All right, so this is BTC. This is BTC chart. So we want to activate the Bollinger Band so that we can all understand how to put it on your chart. So we have BTC chart, and of course, I'm using FTS. That's FTS. That's my #1 trading exchange. So that's what I'm using for this training. All right. So to get that, go to this section. Go to this place that looks like where they normally write indicators. Click on it. Then type Bollinger Bands. Okay. Once you click on it, automatically it comes up on your chart. Okay. It comes up on your chart. Then you can activate it. You can reconfigure it to suit your taste. You can see that we have 3 bands here. We have the upper one is blue, the middle one is red, and also the lower one is blue. But they want to differentiate it so that we don't get confused. What you have to do is just to go to this settings section, click on style, then choose the color you want. Choose the color you want. Okay, maybe for this I want it to be white. Okay, I want to have it on white. And then for this, okay, let's go again. For this, I want the middle one, I want it to be on white. Okay, then this one, I want it to be on, let's say, yellow, and then let me leave the other one on blue. Let it just be on blue. Okay, so that's how to configure this. You can see I've been able to differentiate the various bands with different colors. We have the upper band, which is yellow, and then we have the middle band, which is white, and then we have the lower band, which is showing blue. Remember our definition of the Bollinger Bands? We said you get it by plotting two standard deviation away from the mean. That's the middle band. Either you call this middle band mean, or you call it mean, or you call it the middle band. And this middle band equally serves as a moving average. It also plays the same role as 20-day moving average. So what it means is that if you still go to these your indicators and select your moving average, exponential moving average, and then configure it to 20, it will definitely be giving you this value. This middle band is giving you. Okay, so what it means is that this middle band can also serve the value of 20-day moving average. You can use it as your 20-day moving average. So someone might ask, what do I mean by standard deviation? Actually, standard deviation simply means, from our knowledge of mathematics, it just simply means the rate of deviation, the rate of change in the market. Okay, so what it means is that this upper band is a standard deviation. This the lower band is also a standard deviation, both of which we are plotted away from this middle band. Okay, both of which are plotted away from this middle band. And the higher the higher the rate of change, the higher the middle band. So assuming we are to have 3 standard deviation, that means both of them will now be a bit higher than what we currently have here. But then at the way it is naturally configured in this system is that it was plotted by just measuring 2 standard deviation away from this middle band. So each of them is just 2. The upper band is 2 standard deviation away from the middle band. The lower band is equally 2 standard deviation away from the middle band as well. So that's just how to do that. Okay, so let's proceed. So we've understood how to get the Bollinger Bands. We've understood how to activate it. So let's go ahead. So the next point is a common mistake that many people who use the Bollinger Bands make. There's a common mistake that they make. So the mistake is that most of them, whenever they see that the price has gotten to the higher point of the higher end of the Bollinger Band, they go right ahead to short. This is very wrong. What do I mean by that? Okay, so let's go back to what we had. Let's go back to our chart. Okay, so I'm just going to expand this for more obvious, for it to be more obvious to us. So this is what I mean by that. Okay, let me backdate this. Remember, I'm using BTC. It doesn't mean you just need to use BTC. You can equally choose any chart of your choice. Any chart of your choice. You can use any chart of your choice for this. Okay. See, look at what I mean by that. Why some people normally make the mistake of shorting whenever they see that the price has gotten to the upper section of the band. Okay, this is BTC. You can see that immediately price got to this. Let me zoom it so that you can see it more closely. So you can see that immediately price got to this upper band. What many people who do not understand how this indicator works, what they normally do is that once the price gets to this upper band, they feel that the thing has gotten ahead of itself, that the next thing is that it will fall. Then they will now go ahead and short or sell. But then, the major thing about cryptocurrency, about trading generally, is that you must focus on the trend. You must look at the trend. So imagine shorting this market at this very point because maybe it has touched the upper band, and you feel that because it has touched the upper band, that the next thing is that it will come. Of course, there will be a little corrections along the way, but then you need to focus generally on the trend. When you look at this thing, you can see that what we have here is a general uptrend. Instead of you shorting, you should be looking for places to enter. You should be looking for entry because generally we have an uptrend. So imagine someone that shorted at this point, maybe shorted BTC at 48,177. The same BTC that still went ahead to get to 67,000. So that's why it's not always good for you to short, because the price has gotten to the upper band. Okay, so that's one of the mistakes people normally make. People who use Bollinger Band, that's just one of the mistakes they make by shorting, because the price has gotten to the upper region of the band. So it is very wrong. So that's the mistake they make. Okay, so let's go ahead. Now, the next thing is how to find explosive moves before they occur. When you're using the Bollinger Band, it can help you to identify a big move before it even occurs. So how do we do that? Let's go back to our charts. Okay, let's go back to our chart. So we have this BTC on 15-minute time frame. This BTC on 15-minute time frame. I was thinking there is a way I could maybe change it to a higher time frame, but let's just work with it. So how do you use these Bollinger Bands to find an explosive in the move in the market? Remember the thing we said when we are trying to define the Bollinger Bands. Okay, so you can use the Bollinger Band to determine when a massive and explosive move is going to occur by looking at regions of constrictions. Okay, look at this band. When you just look at this region, you see that at a point that both the upper band, the middle band, and the lower band, they all came together. There was a constriction, there was a coming together. In other words, there was a reduction in the volatility. You remember we defined the Bollinger Band as that it measures the volatility of the market. So whenever there is a coming together of the upper band, the middle band, and the lower band, what it means is that there is a reduction in volatility. And then whenever there is a reduction in the volatility, the next thing that happens is an increase in the volatility. So for here, we've seen that a reduction in volatility has occurred, but then after that, what happens now? You see that there is this breakout that occurred. If you look at it, there was a reduction in there was a constriction, a coming together here, after which there was an explosive move. So you can use Bollinger Band to identify an explosive move in the market by looking at regions of constriction, looking at regions where the three bands come together. At this point, it came together, after which there was an explosive move. But then the question now arises, how do you know where the move is going to occur? That's why whenever you spot this kind of thing, you need to be very, very careful. Don't be in a haste to long, or don't be in a haste to short. You need to give it a little time for you to determine which direction the volatility is going to go to. Is it going to the upper section, or is it going to the lower section? For instance, as at this point, there was a constriction. Then when the volatility increased, we had an explosive move going upwards. So let's actually look at where the reverse was the case. Let's look at an example where the reverse was the case. All right, we had a constriction. Okay, look at what we have here. Look at this. You can see that at this very point, there was a kind of a constriction. There was a coming together of all the three bands. And then after, just from this point, look at it, just from this point, the bands were all coming together. It came together here. Then it exploded. Market dropped. Came together here again. No, constricted, exploded, market dropped. So that's why I said you need to be very, very careful. That there is a constriction doesn't mean that the next move is going to be in the upper side. So whenever you see a coming together of the bands, just relax, okay? Take a chill pill so that you can easily identify where the move is going to come from. So this is one of the ways you can use the Bollinger Bands to identify explosive moves before it occurs. So you need to look out for coming together of the three bands. Whenever the three bands come together, just expect an explosive move to come into the market. Okay, so you can equally use the Bollinger Bands to time your entries and exits. Use the Bollinger Bands to time your entries and exits. What do we mean by that? Let's also go back to our BTC chart as well. Okay, you can use it to time your entry and exit. What do I mean by that? Remember, we said that this Bollinger Bands basically has three bands: upper, middle, and lower. Okay, now look at this point. Look at this. Look at, let's take it up here. Let me look for an example that explicitly defines what we're talking about. Okay, let's say we have this here. We have this. Okay, perfect. This is what I mean. Okay, you can use it to time your entry and exit. For instance, you can see that at this very point that the price action actually went below this middle band. In other words, price actually dropped to this very middle band. So, and all this while, this middle band has actually been serving as resistance. You see, whenever price touches it, it comes down. Even though it didn't actually touch it, but it got very close to it, it came down. The same thing happened there up onto this very point where the price actually went above it. So you can use this Bollinger Band to perfectly time your entry and exit by looking at the reaction here. You can see as all these, well, instead of you doing the normal support and resistance, you can use this middle band, that's the 20-day moving average, to know when to get into the market and when to get out of the market. So assuming I was trading this and then I was using Bollinger Bands, I would just be using it as my entry and exit whenever it touches a, maybe depending on the general trend, depending on the general trend, as we normally say, it is always very good for you to be on the right side of the trend. So if this market, let's look at it, what kind of trend? Okay, we can see here that is a bit from here. This is just the region we are considering. So here you can see that it's actually a bit on the higher side. So I'll be looking for places to go short for this middle band. So whenever it touches this middle band, I will definitely go short. If it gets to the lower band, I will go long. You can see that. Gets to the lower band, you can go long. You get to the middle band, you go short. So that's how you can use to time your entry and exit in the market. Okay. It doesn't just conclude with the middle band. It can equally use that maybe for the lower band, for the upper band, or for the lower band, just depending, as the case may be. Just depends on what the chart you're trading presents to you. Okay, so we've defined how you can use it to time your entry and exit, and then finally you can equally use the Bollinger Bands to ride massive trends in the market. You can use the Bollinger Bands to ride massive trend in the market. Okay, so what do we mean by that? How you can use the Bollinger Bands to ride massive trends in the market. For instance, as you can see here, that all these white, that this price has been in an uptrend. Okay, generally that this has been an uptrend. This has been an uptrend. So you can use these Bollinger Bands by just looking, we can't, I can't say this in enough, that whatever you're doing, whatever trading you're taking, whatever action you're taking in the market, keep your eyes on the trend. The trend is what should guide your trading decision. Okay, let me just remove this Bollinger Band. Let me limit it. You can see that generally what we have here is an uptrend. So this being an uptrend, you should rather be looking for places to long instead of you to go short. Or let's say you've already entered the market and maybe you don't have any other money to put in. You can just, with the aid of Bollinger Bands, you can just use it to ride this trend generally. How do you do that? Okay, so we activate our Bollinger Bands. Okay, so how to do that is this: whenever as this move has occurred and you've equally noticed that this generally is an uptrend, okay, so you can just do that by, let's say this move that has occurred there, you just, let's say you took a long position, all right, so you can just be riding it. Maybe whenever it gets to this lower band, you can decide, whenever it gets to this lower band, you can just decide to take an entry. Okay, you take an entry and then keep riding it. Immediately it gets to another lower band, you can equally take another entry. That's how you continually ride this trend until you are done with it. And then remember, we said you need to focus on the trend. You need to focus on the trend. So whenever you discover that maybe that the middle band, which has always been serving as a support, that the middle band has actually been broken, you could decide to take you could decide to close your trade. So that's how you can use these Bollinger Bands to ride your massive trend. All right, guys, so that's just a little thing I want us to learn today about how to use the Bollinger Bands. I hope you like this, and like I said earlier, if you like what we are doing here, kindly hit the subscribe button, share the video to your friends. Till I come your way again, I remain your man, Mr. Solution.